The shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics and a quick video about something that I couldn't figure out and been really inspired by all that millennial energy and otherwise that's been in the Wall Street Silver Group. Big round of applause to them, taking a lot of these pure coincidences and digging further and researching. And certainly I found one that I could use a hand with. I've been trying to answer as many emails as possible and research around the clock. Gotten Twitter messages asking, does he sleep? I do get a couple hours in there every night. Although fortunately, took a quick break today. I was walking with Silver Dog. Oh, look at him there with his eloquent cross paw formation. Beautiful trail near where I am staying. And we saw a blue jay today. And somehow it popped into my mind that maybe once it gets warm out again, I know it's cold for a lot of people. So maybe we will have an Arcadia event. See my beloved Red Sox play the Blue Jays. I think the Blue Jays are looking decent this year. Red Sox, it's going to be a growth year, as they call it in the marketing industry. So anyway, Red Sox, Blue Jays, sometime in May up in Toronto. Hopefully COVID goes away by then and all that stuff. But as I mentioned with the Wall Street Silver Group, I've heard from a lot of the people in there, and it's really interesting how they take a lot of the topics and dig into them. And along those lines, there was something I saw that I just don't know what to think of it. I was a little confused. But here is Jeff Currie, the commodity chief of Goldman Sachs, and he was actually talking about the silver squeeze of all things on CNBC. Go figure that. So anyway, I'm going to play a short clip that I heard here and I couldn't understand, but maybe if you have any thoughts, leave it in the comments below. I think the best part about what we've seen happen in the last couple of weeks is that there's been a lot of attention shed on the story of the silver manipulation by the banks and how there's been settlements by a lot of the banks, Deutsche Bank, JP Morgan, Bank of Nova Scotia, and others settled or paid fines for rigging the prices on hundreds of thousands of occasions. So anyway, I think it's great that people are responding in a completely legal, honest, moral, and ethical fashion. So along those lines, I have no interest in anything other than just trying to understand and get to the truth so I can provide the best information to my audience possible. So let me play a clip here and maybe someone can help me out. So here we go.
Those other ounces just sit. They don't move.
Right, but the vast, I mean, you look at the flows going in and out of these ETFs, they're not that big.
I guess that was the first thing that caught my attention when there he says, if you look at the flows going in and out of the ETFs, they're not that big. And that seemed a little strange because at least here, looking at the data that came directly from the iShares SLV website, I'm assuming they're not lying with their own data. I just look at what they put up there. So anyway, you see from January 28th, that's the Thursday when Silver Squeeze started, or when the Reddit groups started. It was day after. You saw the GameStop was the Wednesday, the 27th, I believe. So then the 28th, you see 610 million shares outstanding. Now, I called iShares last week to confirm that when they add shares, the woman there told me that it's not like they're working in order. She says when they add shares, that means, you know, if you add 10 million shares, then 10 million ounces of silver. I think it's slightly less than 1 ounce per share, but that ratio goes in that day. I said, who puts the metal in? They said JP Morgan. I thought that seemed a little unusual, but they confirmed that the metal would be added. So here you see between January 28th to February 2nd, over a weekend, went from 610 to 729, which comes out, as you can see here, a cool 118 million ounces. And I was confused why that didn't seem large to Jeff, because here You see, this is at least the Silver Institute numbers that a lot of people look at. There's total supply. So 118 million ounces over last year, a total supply of 962. So 118 million ounces over last year's supply of 962. That's 12.2% of the market. So seems like a few ounces, but anyway, let's continue on.
In and out of these ETFs, they're not that big. But I guess my question is, forget the ETF. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX to be able to hedge that physical position.
And I guess that's where I'm a little confused, because on one hand, I'm assuming he knows what he's talking about. Goldman Sachs is advertising him as their commodities chief. And here in the SLV prospectus, you can see proceeds received by the trust from the issuance and sale of the basket consist of silver deposits. Such deposits are held by the custodian, which is JP Morgan, and on behalf of the trust until delivered to authorized participants. Now, if you're wondering in plain English, what is an authorized participant? If you dig through the website, take a little while to find this document. Somewhere in there, you see Goldman Sachs, amongst other banks, including JP Morgan, are the only authorized participants. So obviously, when you have Jeff Currie, who's the commodities chief, I believe is his title for Goldman Sachs, which is an authorized participant of the SLV Silver Trust, I take the man as an expert on the topic, but I guess I still don't understand what he's saying here.
I guess my question is, forget the ETF. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs.
He said the shorts are the ETFs.
The shorts are the ETFs.
That was what struck me as odd, because he's confirming that there is a large short position. I mean, that was probably obvious to everyone, especially the regulators, that, and you saw that spike in volume at about 2 or 3 a.m. and saw the price drop off the cliff while bullion dealers were getting blown out, and 118 million ounces was added into SLV. So obviously there was a short position, but I thought it was odd when he says that the shorts are the ETFs.
The shorts are the ETFs.
So the shorts are the ETFs. That's what I don't understand, because we saw the shorts, we saw the impact on the price, but the ETFs, why would the ETF be hedging anything? Because you see here, this is again in the SLV prospectus, the offering. The shares represent units of fractional, undivided, beneficial interest in the net assets of the trust. So when you buy a share of SLV, if a new share is created, use of proceeds, what are the proceeds used for? I mean, so people are paying $27 for an SLV share at one point. What does that $27 go to? Proceeds received by the trust from the issuance and sale of baskets consist of silver deposits. Such deposits are held by custodian of the trust, which is JP Morgan. So I guess what I don't understand is, what is it they're hedging? Because if they're just taking the proceeds, acting as custodian.
The shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX.
So the ETFs buy the physical, but if JP Morgan is receiving the proceeds from, I assume, BlackRock, so if new investors buy shares, they pay their $27, money goes to BlackRock, BlackRock passes it in some form to JP Morgan, who goes out, buys the shares and deposits the metal. What is there left to hedge? And I mean, I guess you could say maybe there's, somewhere in that process, intraday, there could be hedging. Although certainly if that was the hedging there, and that was the impact, which you can see brought it from 28.80 to about 27.80 here. I just don't, that doesn't make sense to me. There's something about that doesn't seem right, especially because that's not mentioned any hedging by the ETF. I've not been able to find that in the prospectus. Again, that's why I don't know. Perhaps all the researchers on the Wall Street Silver Group in an honest, legal, and moral way can dig into this one a little further and help me out. I have my hands full. I'm not a lawyer, so I'm going through as many of these documents as I can. But anyway, we'll finish up this clip here.
The ETFs buy the physical, they turn around and they sell on the COMEX to be able to hedge that physical position.
And then you have that effect. Gee, I wonder what the timestamp of those trades were, but I'll put that on my list of things to research. We'll dig into that. Few last notes before we wrap up. This wasn't too important, but just figured I'd toss it in there that SLV amended its prospectus on February 3rd to add 3 paragraphs. February 3rd, that's interesting. Right, here's February 2nd, where more than 10% of the annual supply was added into the ETF. Price came down 10%. So a day after that, sure, coincidence, they amended the prospectus to say the demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect investment in shares. Goodness. And then I guess for my friend Ronan Manley, it looks like he found here are 2 different versions of the prospectus side by side, where somebody even did the legwork for the CFTC. And you can go onto the Bullion Star Twitter page and see the paragraph that was added in the day after, according to one of the authorized participants, the ETF went and shorted the COMEX, which seems unusual. Lastly, before we wrap up here, I just thought this was interesting. The date of this prospectus, which now on their site that I pulled up, was made February 8th, 2021. And it's funny because you can see I posted this video February 7th of what SLV investors should know about JP Morgan and send to the CFTC, SEC, and Department of Justice. In the midst of all this mayhem, there's JP Morgan, February 2nd, 4:59 a.m. in the morning, downgrading silver and the entire sector. I'm sure that didn't have an impact on the price and why they would be hedging by shorting COMEX futures as custodian, at least according to Jeff Currie, authorized participant, Goldman Sachs. Perhaps if anyone can help me with that, I could use a hand. I'm going to go get some rest, and I will see you again soon.